Hi everyone. So let's start today's analysis. I think another good session of Indian markets today, and there are very many reasons to it why I'm saying it is good. Although the benchmark index has pretty been flat to that way, but still, I would say that the market performance has been pretty good. But we'll start with the global markets because they're affecting us a lot in the recent times, and then we'll subsequently come to the Indian markets. So US markets, as we were yesterday closing down at around 313 Indian markets, we saw their Dow futures were down around 300 points. Nasdaq was also down by 180 points odd, which means that the markets were anticipating a not a good show from the US market. Still, the Indian markets actually went on day high, and that actually gave a signal that you should carry your long positions, even if you want to do it on the basis of intraday. So that gave a clear signal that it's a buy at least on the next day because the markets were not even worried when the US futures are showing red, and that too such a long margins, around 1% or so. So as it was expected, US markets actually closed around 420 points down on Dow, and we had a massive cut on Nasdaq of around 500 points. So Nasdaq virtually now has entered into a correction territory because it has fallen now below 10%. So any index which falls more than 10%, we can say that it has entered into a correction category. So Nasdaq has actually entered into a correction category. But the US market yesterday was also very volatile. Actually, they opened a lot of gap down around I think 595 points odd on the Dow if we talk about. But then there was a news that the Commerce Minister of US announced that Mr. Trump is considering some relief on the tariffs of Mexico and Canada. That actually brought the US markets recovered, and I think at one point of time, US markets were down only 150, 200 points if we talk about the Dow market. But eventually, market did not like that, and they probably went again to the similar levels of where they opened. And from there, they had a mild recovery, and we closed around 420 points down on the Dow. And Nasdaq was really fearsome. Actually, it fall around 480 points or around 500 points. Now, what does this show us? So again, there is a big fight going on between the bulls and the bears in the US. There are a lot of people who are exiting their positions from US. There are a lot of people who are actually now taking out money from the US markets, and probably some people feel that the best of the US markets is now behind them, at least on the near term basis. Now, the more the volatility you show, because the VIX yesterday was of US market, if we say it was about 25 in those range. The VIX was yesterday also very high. So if these kind of mature markets are showing VIX of these levels, that means there's the volatility is very high. That means people are running towards hedges, and that means there's an uncertainty in the US markets. Now, in spite of their vice president or let's say commerce minister announcing that the relief on the tariffs is underway, still markets did not want to believe them, or the markets actually did not like the uncertainty. Sometimes you're putting the tariffs, then you're again giving them relief for 1 month. Then you said, okay, I'll put the tariff, but I'll not put higher percentage. Then you say I'll roll back some of the tariffs. So markets never like uncertainty. If this kind of uncertainty will persist, US markets will remain subdued. And that is what we have been discussing also now, that US markets will probably remain subdued for some amount of time. Now US markets is facing a double dilemma. If at all the tariff war intensifies, then their own market starts falling because nobody in US accepted or let's say assumed that when US will put the tariffs, other countries also retaliate. They thought that the other countries will kneel down, bend down, and whatever they want, they will get it, and it will be all good for America. America will become great again, and America will become the richest country once again. It is already richest, but it will become even more richer. That was the basic assumption of the most of the traders in US. That got punctured because other countries have also told that we'll also put you counter tariffs, which means the problems gets actually bifurcated, let's say, distributed to both the parties now. Yes, the country which is exporting to US, they will face tariffs and they will also face a slowdown because the earnings will get hit. But at the same time, US will also face a problem because the import cost goes up and their consumption confidence goes down, their consumer confidence go down, and the consumption levels go down. Their inflation goes up, which is now not liked by the market. So tariff war now has become distributed to both the parties. That means no profit, no gain to either of the parties. Now, next thing comes. Now we all know that the interest rates in US has been higher for around 2 years now. This is the country which has been on 0% interest rate for almost 10 years. Still the interest rates are in the range of 4.25 to 4.5%, that too for a developed economy, which is very high. So, especially for a company which is only growing at around 1.8 to 2%, So that means that the US markets will some point of time will start buckling down, or they will show signs of degrowth. So that fear is also in the minds of the American people. So if tariff wars go very high, that becomes a loss to US. If they don't put tariffs, anyways the economy is slightly slowing down. So if you compare both the parameters, probably America in near term will not surpass, or let's say outperform the markets. So that's one part. Now, Mr. Trump has announced that he will be he will be giving some relief on, some petroleum products of US, Canada. He want to defer some tariffs on the auto industry, and he's even thinking on the percentage of the things to be reduced. So we all don't know what will happen. This is what he's being thinking, and let's see. Let's wait for what comes out. But the Canadian president has told that we will reduce the tariffs on US, whatever we have put, only when US puts actually zero tariffs on us. So that kind of balancing act, or let's say that kind of now positioning, is happening between all the countries. That's not a good news for US, and which means that now outflow will keep on happening from the US markets. So let us put some numbers into perspective. Last year, 2024, from September to December itself, $450 billion of money went from emerging markets to US markets. Then in January and February itself, approximately 150 to $200 billion, which means that approximately $1 trillion of money has actually gone to the US markets, in an anticipation that these markets will really outperform the other Asian countries, or let's say the bigger stock markets in and around the world. Now that is not happening, which means that money will come out and it will remain now idle. So either it will have to go to the bonds of US, or it has to go to emerging markets, or it has to flow to the stock markets of which is not emerging, like Europe or Japan or somewhere. So money has to be parked somewhere. But unfortunately, the US bond yields have also come down. So at one point of time, US was enjoying a bond yield of 4.8%. This is just 2-3 weeks before. Now it is trading around 4.2. Yesterday also the bond yields went up, but they could not sustain. The bond yields went up to 4.32, but they could not sustain. Now they're trading around 4.2 kind of levels. So that interest is also not there in the minds of people of US now. So the money is probably start idling now. Either some money will of course go to the bonds, but large chunk of money which got shifted from the emerging markets and other markets now have a chance to return back. So China anyways have been enjoying the inflows from last 1 month or so. China markets have anyways been up by around 7%. Hong Kong markets have anyways up by around 30%. So their inflows have been much better. So now which country, and Europe also, we have seen that the Europe markets have been usually about 1 or 2 days. Otherwise, they have been trading at all-time highs because of defense spending, because of the money which was coming into the markets of Europe. So Europe has enjoyed their piece of cake. China and Hong Kong enjoyed the piece of cake. Who is left out? Only India. So probably the money which is lying idle has to flow in the equity markets of India. That is our assumption. It will happen or not, well, the future will tell. But that is an assumption, and the assumption is based on some logics. The logics I presented to you. It will happen or not. The chances are very high. The probability is high, but it is still a probability. Certainty is not there. That's anyways will not be there in any kind of realistic world. Trump has also told in one of his interviews that I have stopped seeing the markets, and my policies are irrespective of the market actions, and in the long run, whatever I'm doing is a very good for the American markets. And he has also told that whatever is the falling which is happening in the US market is because of a foreign backed kind of a activity. So these are the four statements which he has given, and all four are dangerous. It is showing that he is nervous, and he is taking into cognizance how the markets are behaving, and he is now probably getting a glimpse of that whatever actions he's taking, the public is not liking it. He may say that he wants to make America great again, but at least the markets, which can be a resemblance of the general public opinion also, is actually telling him that this is not the right way to approach your trade trade activities. So that is what is coming out of the market. That's what Trump has told. Tomorrow and day after we have weekend, we have to wait what happens, and I'm sure that it will be an activity filled weekend. You'll see a lot of speeches. I think today night also he's probably doing some kind of what do you call seminar, not seminar, some kind of activity on crypto. I think he wants to make crypto. He's already announced that he wants to make crypto as one of the biggest reserve now in US. So you see the story of crypto. What has happened? Crypto actually went to 1,010,000, $110,000 before the Trump actually came into picture, and just after he got sworn in. But now it has been corrected at least 20% or more, and now it is trading around 85, $86,000 kind of a range. So major corrections happened also in the crypto also. And I don't know what is the fascination towards crypto. It's a currency which has no value. I would say the volatility is so high. You can see a lot of videos why crypto cannot become a reserve currency, why crypto cannot be relied upon. Be very careful when you're trading in crypto. You don't want a currency which can fluctuate to such an amount. Yesterday, or let's say 2 3 weeks before, or let's say 1 month before, it has made a high of $110,000. Today's it is trading at $86,000. You can't actually rely on a currency for your reserve which is fluctuating so much. It's a joke. If Mr. Trump is saying that he wants to make this as a reserve currency and he wants to make crypto capital, it's actually a joke. I don't know what is the hidden agenda behind his speech or his actions, but be very, very careful when you're investing in crypto. This is not the currency to be relied on. Gold as a much better entity is giving you much better returns and a much stability in the long term. That is the asset class you should own for, if at all you don't want to invest in, or you want an alternate option to equity on debt markets. That is the positioning you should do. That's what I recommend. Choice is yours. So the crypto fever has also come down. One more thing which was happening when US Trump was getting elected was that the dollar index was going up. It went to 110. Now it is trading at 103.6. Just 4 days before, it was trading at 107.8. After that, all the tariffs have been announced, and still the dollar index is now 4 points below at around 103.6, which means very, very high amount of dollars have been sold in US, and the money is actually coming out of the US markets. And it has to flow in the Asian countries. India and China, I've always been saying, it will outperform the US markets this year. This year belongs to India and China. I'll not be surprised if you see Nifty 27,000 plus in this year end. The base has been set. The logics are saying that. So dollar index has cooled down a lot. It has given you a leverage now in terms of better entry point to the FIs, which they actually wanted. And I think the day is not far. Now I can say it is in some numbers of days that you will see the FI inflows now coming into India. They have sold a lot. They wanted, or they actually expected or assumed this market would do very well. They have got their hands burnt. China and Hong Kong has already seen a lot of inflows. Europe has already seen a lot of inflows. All these are matured now. The country which is left out is India. You will see a rally because, as I've told you many days in our videos, in India, unfortunately, there are only one seller, which is FIs. And if he becomes buyer, then the markets just can boom from here because there are no sellers. In India, the biggest problem is there are no sellers. Even if even our DIAs, our beloved DIAs, even if they find the markets to be unrealistic, overvalued, still they cannot sell. They don't know how to sell. I don't know why. That is the sad part of our story of our equity market. So if that seller becomes a buyer, then there are no limits to our markets. As of now, the only worry in the Indian markets is that FIs are still short a lot. They have still 1,80,000 contract short. I don't know when they get covered up, but today's action also showed, probably was seeing that yes, the numbers will again be red in the cash market because they sold IT a lot. But I assume that again you will see some kind of buying in the FNO portion today also. You will see some short covering. Probably the longs will also get it up, which is showing that next week can be probably a action-packed day. If at all Mr. Trump supports us in this weekend. We don't know what kind of googly is coming from him, but if there is no googly and if everything remains pretty systematic and calm, we will see a rally in our markets for next week. A pre-holy kind of a rally we can assume in our markets coming forward. Now, what has happened in other Asian markets? Unfortunately, US markets fall, that's fine, but all the other Asian markets today were also in red. So, China was down around 0.3%, Hong Kong was down around 1%, Australia was down around 1.82%, Japan was down around 2.3%, your Europe was down around, DAX was down around 1.3, 1.4%, StockX was down around 0.4%. So, Nikkei was down around 2% odd. let's say 1.8%. So all the Asian markets and Europe markets all were in red. Still, our Nifty was in green, which is showing you early signs of outperformance. And it is showing you a rigidity. It is showing you a base formation. It is giving you an early indication, early glimpse of a good rally coming forwards. When that rally will come, nobody knows. But two things are certain: that outperformance from Indian markets have started. The trade which was sell India and go to US and China has stopped. It is reversed. And third, probably that 22,000, now the base or the level which we have formed, the bottom which we have formed, it will take lots and lots of effort to break those levels. You really need a very, very bad news or a global or a domestic big reason to break those levels. So these two, three things have now become certain. And it will not be easy for the markets to break down from here. Take it from me. So this is how the global setup have been. But I still feel that China will still outperform. Their structural story of tech companies in Hong Kong and what do you say, their AI kind of a boom, I think it will still remain. It's a technology of future, and that cannot be removed in certain days. That probably structural story will still remain. China will still outperform in spite of all the tariffs which US is trying to put. Japan's 30-year bond yields as is probably at the highest point, which means that a lot of interest will be there now in putting some money in the bond market of Japan, which is a very stable market. And if you remember when the yen carry trade happened in August 2024, we saw a massive meltdown in Nasdaq, some meltdown in Indian markets also, and of course in the Japanese markets. That trade is probably still playing out, and you're seeing a lot of money which is coming out from Nasdaq. Nasdaq funding was a major part of funding in Nasdaq has happened from the money of Japanese markets, the yen carry trade, which we call about. So you have money available at 0% rate. Now it is 0.5% in Japan. So money was available at 0% or 0.5% in Japan. You take those loans at 0%, invest in Nasdaq. The outperformance was there with the tech companies, the Magnificent Seven, which worked out. That money got quadrupled or 8 times or 10 times, and now that trade will start reversing down. So you will see Nasdaq continuously getting beaten down because of that yen carry trade as well. Nobody's talking about it, but that is one thing which will happen. It already happened in August 24. It will continue. Coming back to the Indian markets, so Indian markets again with their resilience and the dollar index coming down, our rupee also became stronger today. We were trading around 86.93 kind of a level. I don't see our rupee getting down from 88 kind of levels. Dollar index probably is inching towards 102. I think at that it should take a support. I don't expect it to break down 102 levels very fast, but now the range of dollar index should remain between 102 to 106, which is pretty okay and should not bother the FIs, not to any investor. If they want to do a long-term investment in India, those are probably the levels, or let's say the levels for dollar index should remain in that range, some points here and there. Crude has been extremely important for India and it has been in a very good range. I think today there is a slight jump and we're trading around 70.4 on Brent crude, but still it is under control. It's a good level. And remember that RBI in its calculations have taken $85 as the benchmark rate for finding out their inflation target. So we are well below that. I'll not be surprised that in the probably April onwards, the inflation numbers which come around, which are announced, you will see a much lower inflation numbers, and that is giving you a headroom to give further rate cuts. RBI anyways has been very proactive. The vegetable prices in February also has been pretty benign. If you are married and you probably have a duty of buying groceries or buying vegetables, you would have seen that the prices of tomato, potato, onions, the major thing which are consumed by India, or let's say majority of the people, have been pretty low, which means that the inflation in February will also be lower, and because of higher base, we should not see an inflation number more than 4% in February, which means that in the April policy, which is I think 7th April, so I have to check the exact date, you will see one more rate cut now from RBI on April. So again, a big headwind, a big tailwind coming forward for Indian markets. Rupee getting stable, dollar index coming down, inflation under control, fiscal deficit under control, all numbers looking fantastic for India. Micro level also and macro level also. What we have to track now? Only two things. We want to see now buying in cash from FIs. Whenever that happens, that will be a great news. From 3 days, we are seeing good action in Reliance. Today also there was a report from Macquarie, and it has given a good target for Reliance. Reliance have probably moved around 7 to 8% line in 7 to probably 2 3 days, which means that probably there is a delivery based buying now happening in Reliance. Yesterday, whatever rally happened in Nifty, particularly, there was a OI reduction, which means that probably a lot of rally yesterday happened only because of short covering. But since today we have given one more rally, third consecutive day today, which means now it will not only be supported by short covering, you will see some delivery based buying also. And the way the price action of Reliance is telling us that those delivery based buying has already started either or is going to start. Now, Nifty Bank today was kept intentionally down because index management was there. They wanted to cover their shorts on Nifty, and anyway they're short on Nifty. Bank Nifty they're anyways long by 7,000 contracts. So in Nifty they're short by around 1,80,000 contracts, which they want to cover slowly. So I think IT and especially Bank Nifty was used today to keep the index managed, but that's fine because that things anyways these people will keep on doing, and because we all know that RDIs have very limited powers in terms of muscle power or money power, whatever it is. And next week going forward, I think the rally should be led by banks. This is what I assume. Pharma will still remain as we're talking about. Even Nifty Auto on a surprise has been on a winning streak, or let's say in green for consecutive 3 days. Apart from the tariff, in spite of tariff fears looming onto Indian autos, because Indian tariff date is also coming near around 2nd April. So we have to wait and see. But in spite of that, our auto companies are probably looking in green. That's a good news. IT is probably one index which is in a dilemma because it is at an inflection point. AI is causing a lot of disruption. It might cause a lot of disruption. US economy, we don't know how it is, whether it is slowing down or is resilient, or it will show an upward graph. Trump tariff wars are also continuously hurting the US economies, but the IT index has corrected a lot. So that is the problem. So it is not at the highs of around 46,000, 47,000 on the IT index level. Now it is trading around 37,000 kind of a level. So it has corrected what around 25% or so. It has corrected. So already the index has corrected 25%. So stock have corrected even more because there are some stocks which have shown resilience like Coforge and probably to some extent Infosys as well. So the index itself is corrected by around 25%. So it's not that much of the things are not in the prices. So that is why I say that probably the downfall may be restricted. But can we see a big buying in IT? We have to wait and see. Anyways, the results are now coming up, will be coming up in April first week for the quarter of January, February, March, and that will be the biggest trigger for Indian markets. If we start seeing some green shoots in those earnings of Jan, Feb, March, then very quickly we'll be touching those 25,000 levels very fast on Nifty. That is the green shoot which everybody is waiting for. And if that number of government of 7.6% expected GDP rate of this quarter, if it stands out to be true, then I think the numbers will be good from our domestic based economic companies, and we'll see a rally in terms of our prices Nifty going up. Anyways, now the sellers at some point of time they have to become buyers. They already started become buyers. No other sellers in Indian markets. That should anyways give a support to the rally and the way the all over the India the markets are getting shaped and all those things. Mr. Piyush Goyal is still in US. Let's see how much he can negotiate and help us in terms of tariffs. We'll wait and see. Other than that, I think today the best thing happened that we opened gap down quickly. There's a buying in minutes. There was a buying. So we took first support at 10 days exponential moving average. Quickly we moved up and we closed almost at a day high when again all the Asian markets were closing in green. We're entering into a weekend where we have uncertainty in whatever Trump will say. If we are still trying to close in green or we're closing in green, which means that the markets are pretty satisfied, they're resilient, and they're not worried now what will happen on the weekend. It's a good news, it's a great news. And I think a lot of put writing is also happening now at 22,000 levels, 22,400 levels, 22,500 levels. So which means that we are forming a base, we are forming a firm base now at the lower levels. This will keep the Nifty protected from the downward trend. Upward trend, we have a lot of resistances. The first major resistance was 22,550, which I think we have crossed today. and we've crossed pretty decently today because we spent some time. It was a good resistance level. This is a level from where we had a big gap down on last Friday when we had the news for that tariff war starting. Now the next bigger uh, resistance is it's around 22,800 levels, which was the level which we supported, which we defended 7 times or 8 times when we eventually broke that level. That will act as a resistance. That is the level which is next to look out for. And then 23,000, where a lot of monthly call writers are placed. So that will be one difficult level to actually jump it through. Next week, anyways, is a truncated week because of I think Holi. So we have to see how much action happens on 4 working days on next week. But I think it will be an action-filled week, considering whatever put writing is happening in our markets today. So overall, I thought it was a pretty decent market. Uh, I don't think any of the parameters should worry us. Now we should put our entire minds and efforts to actually find out where exactly this rally will get punctured, or what is the maximum extent this rally can extend to. Are we ready to close at the month high of the series? We have to put in a question to ourselves and try to find an answer. Or whether we'll stop at 22,800, or whether we'll stop at 23,000, 23,250, another resistance. Then again 23,500 and 23,800, where we all reversed after the budget rally. So these are all important levels where we'll find difficulty to surpass because we don't have triggers. The problem is now we don't have any triggers. The only trigger is only negative trigger, which will keep on coming from US. But there is no positive trigger now. The next thing which will happen is now the quarterly earnings, which will start coming in April only now. And the next trigger is the monetary policy of RBI, where we can expect a rate cut. So apart from that, there are no triggers as such. So we don't know how easy it will be for the markets to cross these important resistances, devoid of any earnings report. We all expect that the economy is doing good, the reversal will happen, but it has to be confirmed. And the confirmation can only happen from the earnings or the commentary from the Indian company when they come out and deliver the results. So that is one thing which you have to really see, and that will only come in April. That is why March month may be a sideways month, or a month of consolidation, or a month where we don't see substantial gains, but we at least start to define our bottoms. We start to build confidence into our investors, and probably to some extent the confidence in the minds of FIs also, that this is the country again for you to look back and invest. That is the kind of confidence we can still show into our markets. Apart from that, I think April onwards, anyways, that tax benefit will also start kicking in, which I think our finance minister has given. So those all things will also start kicking in. But we have to really wait and see the earnings, how the earnings pan out for this particular quarter. We are expecting a better than expected earnings for this quarter. What the biggest brokerage reports are saying that FY26 means this financial year is going to start. We can see a earnings increase of around 15%. Which means that if my EPS is at 1140, if I discount that earnings in this calendar year, if you call it discounted cash flow, then probably you can see. So that day we did a calculation that even if you take a median P multiple, and if you multiply that, we are anyways reaching to 24,000 plus kind of level. And if you see that 15% increase again in the earnings, then easily we can touch 27,000 or plus levels in this calendar year or this financial year, which is going to commence for Nifty. That's a very fair target. It's not a overinflated target at all. See, one thing you have to understand now, that our Nifty is not of 10,000, 20,000, or 15,000 Nifty now. It is now 25,000, 24,000 Nifty. So even absolute terms, the value will be higher. 3,000, 4,000 points kind of rally will happen every year because the base is increasing. So if we consider those kind of good earnings, 15% is the normal average earnings which India has been delivering for long, which means that you can give a higher multiple again to India. So you get double advantage. You get higher earnings in terms of EPS. That takes your Nifty forward. And when you see that kind of a growth, people will give higher P level also to Nifty. The median P level for Nifty has been 21.8. So if you start giving that P multiple, then probably the targets will look even bigger. Which this is what even Morgan Stanley has told, that in best optimistic case, the Nifty can reach to 30,000 in this financial year. And it is all probability. It is not exactly a probability. It is something like it's just simple calculations in terms of P multiple and the earnings. So these are all possible numbers. It's not something that cannot happen, or it's a out of the box kind of calculation. If the earnings growth remain around 15%, and if we give a decent P multiple of 21.8, you can just do a simple mathematics. You yourself can do it. You'll find those kind of levels. So, and we are inching towards that. In between, yes, there'll be some rally puncture down here and there. Uh, you'll see a rally, then again some clawback, then again you will moving forward. Those things will keep on happening. But on a broader scale, your small cap, mid cap, Nifty, everything is looking fired up. Banks are looking extremely good. I was seeing yesterday the P chart of banks. You can also see it. It's very mouth watering. I think the P levels of Nifty Bank has come to 12.6. The median P level has always been around 15.5. The EPS of banks is 3800. So if I shift one P level up, which means I'll get a 3800 points into my kitty. So even if I take the bank nifty to the median P level, which is the average P level of last 10-20 years, then also bank nifty is due for a rally for around 1000 plus points or 10,000 plus points. So bank nifty ETF is, I will definitely recommend you. ETF of metal index, I'll definitely recommend you. ETF of Nifty also I recommend you. Three Nifties I'll definitely recommend you. Three ETFs, which is one is Nifty, one is Bank Nifty, and one is metal index. These three things, even pharma will do good, but pharma is not corrected much. But if you can even if you can diversify yourself in these four ETFs, pharma, metal, banks, and Nifty itself, I think we'll make a lot of money in this financial year or this calendar year. That's looking phenomenally good. So that's something you can look out for. The valuations have become very, very attractive. The only number, two numbers you have to track now to take confirmations, or let's say to set bigger targets in Nifty is two things. One is FI cash volumes. We want them to buy in cash. We want them to buy in delivery, not in only short covering or shorts. That is not the way to take the markets up, because those are very short-lived things. If they come back on deliveries, if they do a cash buying, if they do those kind of portfolio based buying, that means they're looking for 6 months, 1 year down the line. That is what we want. So keep a close eye on that. FNO again, I mean, eventually it has anyways become a positive for us. Last 3-4 days I've been telling you the FNO data is all good, it's all green. Yesterday also they have bought around 4,200 crores of FNO buying. I think if you combine index and stock futures, so they're doing FNO buying. There's no denying in that fact. But we want cash buying. So that is one number that we should track for. And second is our GDP number. Unfortunately, it comes very late. It will come in somewhere in May. So we have to depend on the earnings of our companies, of our company. So any commentary which starts coming in now in the month of March for the quarterly updates, or any other high frequency numbers in terms of vehicle growth, sales, or let's say our credit growth numbers, or any such kind of high frequency numbers, GST numbers, or whatever numbers we track for finding the health of our economy, those numbers you have to track, and the cash numbers of FIs. Just that's it. You have to just track these two numbers for finalizing that we are going to a much higher trajectory from here onwards. Rest all things are looking positive. There is no denying from the fact the data, the valuations have become so attractive. The global front footprints have become very attractive. The kind of capitulation that has happened into our stock markets is pretty good to take it forward. It will not be a straight line recovery. We'll go up, we'll come down. It might be a W-shaped recovery. We don't know. That we have to only see whether it is a W-shaped recovery. But I can tell you fairly uh, by certainty the 22,000 level now is very difficult to break. It will not be an easy level to break. And we'll be touching out our very favorite level of 22,800 very fast. I don't think there's much time left. Next week itself, we'll hit that number of 22,800. Until unless Trump, like weekend comes out and he announces something very extraordinary, or which we, out of the box, which the market is not aware, that I can't say. But otherwise, it's poised to go towards the levels. So with this, I'll end my video. Sit tight, enjoy. We are now into a bull market, and as all wise men say, now at these levels, only a fool can lose money if you buy from here. So don't become a fool. You should now make money. The pain is very close to getting over. Now it's a time to cheer. So we have seen a lot of tears. Now please see a lot of happiness. That's my only appeal to you. Remain invested. This is a time to And if you can invest in 4 ETFs, I'm telling you, you'll make a lot of money. This is the time to remain invested. This is the time to actually gain, the cheers, the happiness in terms of your money making endeavors. With this, I'll end my video. Thank you so much for listening to me. Thanks so much.